The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts, let's have a quick look at the economic data out there. And Japan's economy shrank for the first time in a year in the March quarter at a faster pace than expected, underscoring the fragile nature of its recovery, which is now under threat, economists say, from President Donald Trump's trade policies. Meanwhile, in the US, April retail sales slowed sharply in April as consumers pulled back on spending. Also payback for consumers front-loading purchases of cars and trucks ahead of tariffs. Wholesale prices for services like airline tickets and hotel rooms also fell, pointing to softening economic growth. US weekly jobless claims were unchanged, the US labour market stable, business inventories barely rose in March, and US manufacturing output fell in April on weak auto production. And the Federal Reserve kicked off a two-day framework review with Chair Jerome Powell saying the world has changed since 2020 and that framework must adapt with supply shocks expected to be more frequent into the future. He said we may be entering a period of more frequent and potentially more persistent supply shocks and a difficult challenge for the economy and central banks. Let's get into the technicals now. Thomas Atkinson from FX Evolution joining me. Always great to see you. Let's start with gold. I mean, there were some calls that gold wouldn't be hitting as high as potentially people had thought given the trade truce or temporary truce between China and the US. But what are the technicals showing us, Thomas?
Yeah, so what an interesting week for gold so far. I mean, obviously we saw the market break underneath the key 3,200 level, and that looked very weak. And we've done some recovery over the last 24 hours. We can see here, or viewers can see here, that we've got this big green candle on the right hand side that's quite a powerful looking one. Now, we're not out of the woodworks just yet. We've actually got a level just above the previous lower high, which is about 32.65. And if we're able to break above that, we get back above the red line, the 20 moving average, which a lot of viewers would know is probably the most popular moving average on the daily and weekly charts. And that will really do a lot to repair the structure. For now, gold's still a little bit dubious, but two really key levels to look out for, and that's the 3,000 zone. If we keep moving down, I think there'll be a good chance that some larger buyer will try to have a go at that level, and of course the 32.65. Regardless of the macro around and the news, it does seem like gold has been doing its own thing for quite a while. We've been on the show now for years, obviously going on about gold for at least the last 2 years, and it's because it's there's still geopolitical tensions. I mean, we're only off for 90 days. Okay, maybe never come back. But in this case, gold is still, impacted by a lot of currency and treasury moves. And I think a lot of people are probably forgetting treasury is refinancing the biggest amount ever third quarter this year.
Indeed. All right. I love how you say gold's doing its own thing, as it is wont to do. Nadine was telling me she's seen people lining up outside the bullion as well, buying bars. What about what we're seeing in the S&P 500? I mean, it had a gain of around 0.4%, just under 6,000 points.
Yeah, what a gain. This is what they call a V-shaped recovery. So around that red boxed area, we kind of expected maybe to see a little bit of weakness starting to come back into the S&P. But then, of course, we got the US-China reduction on tariffs, and that caused the market to go basically ballistic. It went really, really bullish after that. And what I've done is I've highlighted a couple of key things here I think we need to be on the lookout for. First up, this is a phenomenal recovery. And, of course, it suggests that we will at some stage make an all-time high on markets. And one of the reasons that is because we've recovered so much off the lows. I don't think anywhere back to the 1950s have we ever seen a market recover over 17% from the first drop and not actually go back to make an all-time high. So that's an interesting stat. But on top of this, we've now left behind a whole bunch of gaps. And I think the key level to be watching is actually where this trade deal was done, which is that 5,600 area, because we now have a lot of confluence there as technical analysts. So we've got the 20 moving average daily, 50 moving average daily, 200 moving average, which isn't on this chart because there'd be too many lines, And even we have anchored VWAPs sitting on there as well off some of the serious lows. So what this is we call it a confluence point. And I think for S&P 500 traders, at some stage, we will usually see some form of weakness. The big chart that's going around right now that we don't have here today is RSI 70, which means that all the stocks are overbought by quite a lot. And that tends to bring a little bit of weakness in. So we're looking for the 5,600 level. And I don't think that people need to get too excited and too FOMO at this stage. I mean, the market does look great, but I always say better off not chasing. And timing is everything in markets.
It is indeed. All right, what about with our market? What's the FOMO level we should be looking at there?
Yeah, we're kind of at it. FOMO levels are being reached. So obviously all-time high, very close now. A little red box up there at the top around the 8,400 to 8,500 level. We've already gone past the most traded zone, which I think we were on the show last week talking about this. And I said all of this area looks, very good for us to hit. The great thing about the Australian market is it's done the repair. So similar to the S&P, we've recovered, we've gone above the lower highs, we've broken structure to the upside. And this again suggests that if we get pullbacks, even if they're a little bit deeper in the future, that there's probably going to be a fund buyer. One of the things I'm seeing through a lot of the Western markets is that a lot of fund managers have missed out on some of this rally, and that doesn't tend to make anyone happy. So markets, when they pull back, I would say there's going to be a little bit of lining up to be done. Key levels to watch out for on the Australian market, probably the 8,000 if we pull back. And for the upside, I think we're getting very close now to a resistance, 8,400, 8,500 on the charts.
Okay, let's drill down stock specifically then and kick it off with Fortescue. Still got iron ore around $100 a tonne. What are the technicals showing us for Fortescue?
Yeah, so all the iron ore miners actually looking a lot more exciting. I thought I'd select Fortescue because probably other people have covered BHP and Rio. But Fortescue has what we call in the technical analysis world, an inverse head and shoulders. And it's quite a well thought out pattern. It takes time, as you can see here, months to create a pattern like this. And we're breaking through what we call the neckline at this stage. So what I've done is I've highlighted a couple of key things that I think we need to be paying attention to. One is on the left-hand side, what we call the most traded level. Now, previously Fortescue was in a pretty big range before the Feb, March, April sell-off, and it traded the most at $19.20. That was the most popular level for, traders to be buying or selling at. So that's going to be a key level for technical analysts, especially if this continues to rally up. And another thing is the neckline or the head and shoulders pattern, which would complete at the highs at around $20.50, 21. The two key levels to look at from a technical level, certainly a lot of momentum on the side of iron ore at the moment. And as you just mentioned, iron ore seems to be breaking new highs when you're looking at the spot price as well. So it doesn't matter whether it's a BHP, a Rio, or an FMG chart, all of them seem to be improving it, this week particularly.
All right, CSL. I mean, there's a lot of focus on the broader healthcare sector, particularly given what we're hearing from President Trump.
Yeah, CSL has not been good for quite a few years. It's been great if you're a technical analyst and you're selling the highs and kind of buying the mid zone or the lows. But we find ourselves back down at the point that we were, all those years ago. I mean, back in 2020, it's the same price. So CSL, big range. 220 usually to about 315 has been the trade range. We're back at this area. A lot of news, of course, around this. We've got all sorts of things going on with executive orders and discussions about the US and pharmaceuticals and everything. So, of course, that's dragging on it. It did have a really nice bottom low only about 3-4 weeks ago, which was at this 220, 230 area. So we're looking for a bid here. I think it's too early to tell from the technicals in terms of whether we do have a strong bid from the street, but viewers will note that there is a lot more volume going through at these levels. So I always like to look at high volume. High volume is happening. That suggests there's a lot of activity, and we probably will see some form of breakout soon. So whether that's to the upside, which I'm thinking it probably will be, usually our markets overreact, or if it's to the downside, under 220, things go to 200 very quickly. So I think technical analysts anyway, momentum traders will be very acutely watching this chart.
And the banks, I mean, we've been focusing very much on CBA still hitting records, but what is Westpac doing?
Yeah, I did have CBA on my chart today, but I thought I'd go with Westpac because I know you. I know everyone be talking about CBA. So CBA making all-time highs, breaking out from accumulation. NAB also doing something similar, not all-time highs, but breaking out from accumulation. In Westpac's world, though, it's huge rallies followed by big sell-offs, followed by a what we call the golden fib. So this is the area that most technical traders are aware of. And of course, Fibonacci dates back a long time ago. And what recently happened was we saw the market just come back down to around that 31 area, and that just at $30.50, and that's actually the 61.8 golden fib zone. So we saw some buyers come through at this area. I always get excited when you see a golden fib pocket because, especially off a break to a new high, which is what it did through the April-May period. That suggests that it's a pretty healthy pullback and that buyers might be around. And what we've seen so far is a bid. So we're trading at the most traded level. That's 31.34 on the area. And for now, I guess I don't feel that bearish on Westpac. I think that the price charts are improving on it. And because of what we've seen with CBA and NAB breaking a new high recently as well, there's possibility that these other two banks, ANZ and Westpac, start to improve. So a bit behind they are compared to the others.
All right, Thomas, thank you. Have a great weekend. Thomas Atkinson from FX Evolution. That does it for this edition of The Trade. Be sure to join us on Monday.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.